When it comes to money, are you on your journey to becoming financially free? Maybe you don't even know what you got to do to become financially free. And I'm so excited to have on the department today, Kiana Danial, other known as Invest Diva, an 8-figure investor, best-selling author, and in her 30s became financially free. Kiana, thank you for coming on the department.
Thank you for having me. Excited to be here.
Yeah, I am. We were at dinner yesterday, and you told me what you did, and you helped people. You expose them to the power of investing, which I've learned in my entrepreneurial journey that for many of us, that's actually the game we got in. We don't discover this till after the fact, right? It's about making the money, and then you realize, oh dang, I cracked the code. I know how to make money. What the heck do I do with this money? And everything is about retirement that I know, that I learn about, and everything's about like way down the line of creating financial freedom. And when you were like, yeah. I was like, so stocks, right? And you're like, yeah, pretty much. I was like, you probably don't have to work anymore, huh? You were like, no, I don't think so. But I do, Bro, I would like, a lot of people would like to be there.
Mm-hmm.
Like, you don't have to work, huh? No, I don't have to work, but you choose to. Yeah, I like to work. I like to help people. And so I just want to, I'm saying all this because I'm selfish in the nature of this conversation. And I think it's going to be very valuable though.
Selfish is the best because that means that you want to do something with your life and your life is a gift. So I'm super happy to be here and help you and everybody else who's listening out.
Yeah. So can we just start with maybe you defining what is investing and what would be like either the opposite or the enemy of investing?
Love that question. So what's fascinating is that a lot of entrepreneurs are already investing. But when I talk about investing, one method of it is investing in financial assets like stocks, real estate, options, Forex, crypto, you name it, or even other people's businesses.
You said forks.
Forex. Foreign exchange.
Oh,
that was my first love.
Okay.
So I define investing in 3 things. There are 3 methods of investing. You are already doing 2 of them.
Okay.
Number 1 is investing in yourself.
Yep.
Being selfish. You are right now investing in yourself. And you selfishly asked me to come here for free and tell you all this stuff, but you had the guts and you asked me. Mm-hmm. That is investing in yourself, and you've been doing it.
Yeah.
And you've been doing a great
and
job
even
at
like
it.
I've spent now over 6 figures in personal development within the last year. I've realized that that's the greatest return on any investment. Okay, which thank you.
100%. You're already doing it.
Yeah.
And that's why, by the way,
why
entrepreneurs
don't people in your idea, why don't people invest in themselves?
Because they don't think they're worth it, and they have bought into the fact that it will have returns. Unfortunately, because I didn't used to invest in myself. I used to think I don't have the money, I don't have the time, I had all of these excuses so all of us probably have the same story that we hit rock bottom, and I'm like, oh my gosh, I don't want to do this anymore. Something's got to change. And that is when you start. Some people don't. The 1%, the crazy 1% do and do it well. And it brings them to the second type of investing, which is investing in their own business. Or in whatever that is bringing them income. So if you're a 9-to-5 employee, I have a lot of members who are not entrepreneurs. In fact, the hardest people to teach about the third type of investing are entrepreneurs because they get stuck at the first 2.
Yes.
And they're like, this is great. I'm making all this money. I do not have to do anything else. And that is where a lot of them go broke. You have no idea how many 2 Comma Club award winners, I don't know if your members are audience are familiar with that.
I'll just say the 2 Comma Club award is people who get an award for making $10 million.
$1 million in revenue.
In a year?
No.
Just
whenever.
Okay.
With facilitating a business or a funnel, if you will.
Yeah.
I've seen, and don't even there are people who have made $1 million in whatever time frame. Some people have made $1 million in a year, in a day, In a day, they have made $1 million.
Yeah, shout out to the sales girls.
I don't know about them, but so many of them are actually broke. When you look at their bank account, some of them are negative. Why? Because if you don't know how to manage $100, you're not going to know how to manage $1 million.
Say that.
And then because though they have seen this joy of, oh my gosh, I've made $1 million. Now, instead of going and learning how to make this money work for me and grow and keep it, I'm going to do the first 2 types of investment again. Now, again, that's great, but it's a trap, because how many lottery winners make all of those $1 million and then they go back to where they were comfortable? And the problem with entrepreneurship, I would say, is that it's very emotional, actually. And what's fascinating about the perception of people of the other kind of investing, the third type of investing that I am going to talk about today, is that, oh my gosh, that is too risky. I don't have the patience. I don't want to be stuck to my screen all day. Like, I would rather put all of my money back into myself, back into my business, which logically kind of makes sense. They have made money out of it. They would think that if I do more of it, I'm going to just make more and more and more and more. But again, because you're not letting it passively also do its thing, you're capping your financial freedom. You're slowing down your financial freedom. And I will talk about what I even mean by financial freedom. Now, by contrast, when I made my first $1 million, then yes, I am an entrepreneur. I get this a lot on my social media. Oh, if you're such a good investor, then why do you have a business? Like, I'm like, okay, no, it's 3 kinds of investments. I invest in myself. I learn the mindset. I learn the skills. There are so many things that I still need to learn. I have an asset. Asset number 1 is myself. I have another asset, which is my business. Now we get to the third kind of investing, which is other people's assets. Now, Alex Hormozi, Cody Sanchez go about it in actually buying a whole other business. There is a beautiful art about it. I'm not about it. I don't have the patience for that. Some people invest in real estate, tangible assets. Again, it's in other people's something else. Now, I'm lazy and I don't have the patience. I already have a lot of things going on with my business that I invest in other people's businesses in the form of stocks or private equity. And you can literally invest. So when I said Forex, and you said, what is Forex? That's foreign exchange. That is a whole country's asset.
Oh, wow.
So when you're investing in the US dollar, or not investing in US dollar and instead investing in the Japanese yen or the Swiss franc, which are quote unquote safe havens in the times of uncertainty, a lot of rich people go and buy those assets.
Wait, can we slow it down for a second?
Yes.
Okay. Because like
what? I'm not going to talk about crypto.
I would say yes, I'm 1 and 2, right? Like, I understand the business aspect. It clicked for me. I've been an entrepreneur since 2016, and this journey is, I mean, I feel like it's a lifelong journey, right? So, but let's also say if you maybe work a regular job, because I want to talk about the principles. Would you say if like you're a W-2 employee and your money is connected to your time, I guess you could say, what would you say to them? What would be another way of them, quote unquote, starting a business? Because like, I mean, not everyone could start a business, or would you say, can everyone start a business?
They shouldn't.
They shouldn't, right? Yeah.
I used to think everybody should.
Yeah.
I've learned that no, not everybody should.
So if I am making 60 to 80K a year, and maybe I have, like, I don't know, like, I don't have a business. So like number 2, what do I do about number 2?
Absolutely. So yes, if you have more money, you will be able to invest more. But especially for a W-2 employee, making the money that they're bringing in, I call it make babies.
Money babies.
That is the way, the only way for them to financial freedom. And I'll tell you an example. Would it be okay?
Yeah.
How much do you think a UPS driver makes?
Maybe like 75.
So back in the day, it was $14,000 per year.
Okay.
14. And we have a story of this UPS driver who invested very slowly. And he retired with $70 million.
Dang.
He gave it time. Now, so this is how you can accelerate your investments. You either pour more money into it, which as an entrepreneur, you have an advantage. That is how I accelerated my portfolio. Or you give it time. That is what I'm doing for my daughter. She's 6. She's going to be a millionaire by 13.
Yeesh. How?
So I hired her for my business.
$13K a year.
I invest you pay them $13K, and then out of that you can invest $7,000 of it, again tax free, in a Roth IRA for minors. You invest it. Don't forget to invest it. Some people just put it in the IRA and they don't invest it. Invest it, and she's on track. She bought Nvidia before it was cool. Dang. When she was 0 years old, and she's 700% up. So
dang it,
good
man.
Stuff.
What's her name?
Her name? Oh, she's gonna be a target.
No. Okay, this is cool because I love like you're proving, because I don't want to get to people to feel disqualified. Like your daughter is doing it at a level that an adult can do it at, right? And so, and obviously, here's the principle I see. It's taking somebody to kind of either coach her and let her know where the opportunities even lie, because that's the thing. It's ignorance. This is why we all lose money. This is why we put it in the dumb stuff. Or the few times I've ever even tried Robinhood, they've always been terrible because, and I think you could speak to this, I think delayed gratification. So like entrepreneurship, it's like, it's money, it's coming, it's flowing, it's going. And like you want me to feel a different way about this part of my money. And I think the delayed gratification part, it's hard. And one reason it's hard is, personally, I haven't seen too many young people that are financially free because their expenses are taken care of without having to think about it, you know? And so, and I would even say young people, and also retired people. I mean, I see, you know, they're living in the house they bought decades and decades ago. And so that's why they're able to live there. And they're just doing like basic Social Security or something. But like that, even my hesitancy with the IRA Roth stuff. Somebody told me about this 12 years ago when I was 21. Like, bro, Roth IRA, bro, you got to get started the sooner you start. I was like, I have not met one person who is pulling their Roth, or who's benefited from having a Roth IRA. Is it even a thing? Anyway,
I love what you just said. No, I love it. First of all, it is a mindset, and delayed gratification is the thing. I always say entrepreneurship and investing are literally, you're tapping into the opposite side of your mindset. Entrepreneurship is drive, let's go, let's do it. And investing is like, set it and forget it and do not look at it.
Yeah.
Like, some people are like, oh my gosh, I'm passionate about investing. I'm like, oh my gosh, that is going to ruin you. Because if you're passionate about it, like you cannot put any of your passion in your investment portfolio, because it is going to burn it.
Would you say then, like a day trader, you're not necessarily an investor, you're a day trader? Like it's a different...
Let me explain.
Okay.
I was a day trader. That is where I got started.
Oh, wow.
And I'm an entrepreneur. I'm dopamine. I'm like, get bored easily. I'm like, let's go. And I started day trading. That was my first job on Wall Street. And it was day trading, Forex, foreign exchange. Again, I'm an immigrant. That was the first thing that actually clicked for me, because I used to live in Japan. And when the 2008 market crash happened, everybody was talking about recession. I had no idea what a recession is. It was like, Lehman Brothers is going down. Like, who's that? Like, I had no idea. But the one thing that actually clicked for me as an immigrant in Japan, so you know how you go to the airport and you have to exchange your money. So you go to Europe or whatever, and you exchange your dollar for the currency of that country. And then when you come back and you exchange it back again, sometimes you make some more money and sometimes you lose money, because the value of these two currencies against each other had gone up and down.
Yeah.
Now, for an average American, this does not make no sense. But for immigrants, this is everything, because we're always calculating everything based on the US dollar. What is the value of my money in my country?
Right. I've been in Mexico a few different years back to back, and it's like, it's different. Yeah.
Yes.
Okay.
And so that was it. So So I heard this. I heard somebody saying, oh, the US dollar is getting cheaper. Ooh, if I ever want to like, I always had this dream of coming to the US. And I was like, if I'm ever going to go to the US and I want to buy my US dollar cheaper, now it's the time.
Wow.
And so it was going down, was crashing. And it was September of 2008. It was August of 2008. And I could sense that it's just dropping. And every day I would go to the ATM and exchange some of my Japanese yen to the US dollar. The next day, it was even lower. I'm like, oh, dang it, I should have waited. And then the next day, and I was talking about this to one of my friends, and I'm an engineer, by the way. I was studying like electrical engineering in Japan. I was like, can I like write a code and like tell it to my bank to like buy US dollar when it reaches this level, this low, so I don't have to go to the engineering mindset? And they're like, oh yeah, that's already invented. It's called like a buy limit order. I'm like, all right. You like open up a broker and you tell them to, like, oh, that's cool, so let's do it. And I did it. And long story short, I'm not going to tell you exactly what I did take a bit of a huge risk because I went on leverage I shouldn't have. I did it. I put in 10K and I made $10,000 by September of 2008 when everybody was losing money. And I'm like, oh my gosh, this is the best thing. I am quitting engineering. This is the most boring thing ever. I am going to learn everything there is about finance. And so I started interviewing. So I used to teach English in Japan. And so I started asking my businessmen. I had a lot of businessmen as my students. And I started asking them about the financial markets. And they started teaching me. So cool. And I became obsessed. Finally, I was able to come to America, worked on Wall Street. But so day trading was what I knew at the beginning. And it was very exciting. And this is what day trading is. Day trading is when people it's not investing. Day trading, people who do it well, first of all, you need to have a lot of money so that you don't get kicked out of the market.
Oh, wow.
The thing that I did that was very, very high risk was that I borrowed money from my broker and took a position that I thought is going to pan out. And I was so fortunate that time that it did pan out. Years later, when I was on Wall Street, I was reporting from the New York Stock Exchange. I was hearing all of these stuff from these big bros. And I'm like, this is great. I'm going to do everything they're doing. And they were day trading.
What does reporting from the New York Stock Exchange?
I got a gig.
Okay.
To report.
Okay, yeah, it's words that I hear that I've never heard explained. That's all.
Right. Yeah. No, so I don't want to. Maybe I should go to my backstory. So I came. Okay, let me
No,
quickly.
I mean, where you were going.
So I got an actual job on a Wall Street Forex brokerage, Wall Street company, and I started learning there. Then I got fired, and then that is when I hit my rock bottom, because right before that I was in New York City. I was working on finance. It was like all of my dream had come true. And I was dating this guy and he was a surgeon. And I thought I was going to marry him. And it was amazing. And then I got fired. A week later, he dumped me. And then I didn't have money to pay rent. And that is when I'm like, I got to do something about it. I invested in myself, number one. Learned how to read off a teleprompter. Now, mind you, English is my third language. So I learned that. I'm like, if I can read off a teleprompter, I can get a gig to report for financial markets, because I had seen that somebody else doing it. And I'm like, I'm going to follow her path. I'm going to do that. And then I'm going to continue being in this world and learn from the financial people and then trade on my own. That was my plan. Invested in myself. Learned how to do this, and got a gig to report on the online financial markets. Because by this point, I knew how to analyze. I knew like the basic financial terms, so I could report on it. And so I got this gig to report on the news, basically, from the floor of New York Stock Exchange.
Oh, yeah.
And that is when I was hearing all of these strategies from the finance bros on the floor. And I was super excited. I'm like, okay, now I've made it. I'm actually on the floor. I'm going to do everything they're telling me to do. They're making millions of dollars. That's the logical way to do it. When all in, at this point, I had saved $15,000. When all in, all of these things. lost it all. And I'm feeling, okay, what just happened? I was doing exactly what the pros from the New York Stock Exchange are doing. How did this happen? And I posted about this on LinkedIn because, okay, investing is a scam. I'm never going to do it again.
What year was this at?
This is 2010. 2010.
Okay.
11, I want to say. And a person, so in the investing world, he's famous. His name is Guy Spire. He saw my LinkedIn post and he had seen my reports before. So he kind of knew who I was. And he saw my post that I blew up my account and was like, okay, Kiana, you have a lot of potential. He DM'd me. He slid into my DMs. And it's like, I think you have a lot of potential, but you're doing this all wrong. And I'm like, what do you mean? Like, I was actually listening to everybody else. What did I do wrong? And he said, you need to stop trading. I need to start investing. And I'm like, aren't they the same thing? What do you mean? And he said, these big bros, these hedge fund managers and people on the floor, they are managing millions of dollars of other people's money. This is not even their money. So number one, they don't even have any emotional attachment to it.
Yep.
Number two, trading is an all-day job. You are guessing where the market is going, literally guessing. There is a 50% chance. And later I learned the biggest hedge funds that are making billions of dollars, they only have to be right 51% at a time. So they optimize their algorithms to be 51% at a time, which means 49% at a time they're losing money. Now they can afford it because they have billions of dollars in funding. I can't afford that with a $15,000 account. I'm going to get kicked out of the market.
When you say kicked out, it just means you got no more money to play with.
It means that you hit a margin call. So you trade through a broker. And especially when you don't have enough money to invest, what they offer you is something called a leverage. What leverage is that, hey, you only have $50, that's okay. We will loan you $100. You can go and trade with that. And if you make the right guess, you're going to keep not only the money that we gave you, but also the money that you made on top of it. Sweet. Now, this is a double-edged sword because the opposite of that is that if you are wrong about your strategy, you're not only going to lose your money, you're also going to lose their money, and they are going to kick you out. That is called a margin call, which means they're going to liquidate all of your assets, whatever else that you were holding, whatever else that you were investing in.
Okay. So $15,000 it wasn't with Robinhood. You used a broker?
I use a different broker.
Would you recommend doing it that way as opposed to?
So here's what a broker is.
Yeah.
The broker, it's not the broker's fault.
Sure.
The broker is literally like your real estate broker agent.
Yeah. Okay.
So they're facilitating your access to the markets.
Okay.
The stock market is here,
right.
or the currency exchange, whatever it is. You can't go actually buy it from the New York Stock Exchange as normal people.
Okay.
You need a brokerage.
So it would be like, hey, can you do 15K in that thing? How much do they? How do they get compensated?
They get a commission.
A commission.
And
for doing what you told them to do?
Yes.
Just for being the middleman.
Okay.
That makes sense.
Middleman. And so, by the way, that's why cryptocurrency is interesting because it cuts the middleman. Whole different story. So they're just a middleman.
Okay.
And they benefit from you losing because they get all the money. That's why they offer you their leverage. And I used to work for a broker. Like, I know all of their tactics. Like, I know what they're doing, which is so crazy. And so for stocks, we have Robinhood, Fidelity, TD Ameritrade, Vanguard. For foreign exchange, we have so many other ones.
Which one though? Like, just
doesn't matter.
Doesn't matter.
It doesn't matter who you go through. It matters how you do it.
Okay.
You do want to choose a broker that is legit because you could go through a broker that are pretending to give you access or pretending to have all of these insurance, and they could just like take your money and then either go broke or bankrupt and take your money and go away. So you need an SEC approved brokerage. And here are the ones that are available now. We have Robinhood. I love it. I love Robinhood. user-friendly, great for beginners. Just don't read their daily stacks. I love it, but it also gives you way too much exposure to the markets and it makes you emotional. You don't want that.
Oh, wow.
Just use them as a tool and then do your strategy on your own that I'm going to talk about.
Okay.
You can use Fidelity, Charles Schwab, Vanguard. I guess there's Public, Webull. They're all fine. Doesn't matter. They just give you exposure. Okay?
I'm like an aesthetics guy. Which one has the aesthetics?
What does aesthetics mean?
Like just how it looks. Like,
oh,
I don't want it to look like I'm jumping into a Windows XP app. I want it, like.
So Robinhood and Public have the most beginners friendly.
Okay.
And you can do it from your phone, which is a good and a bad thing.
Sure.
Because I don't want to have easy access to my broker.
Yeah.
I want to do my strategy and then go back to my business and make more money.
And when you say strategy, it's kind of like a set decision.
So we're going to talk about that. I mean, I may be able, but it's like a set decision that you created based on your risk tolerance, based on your financial goals, based on your knowledge of the markets, and based on the economic cycle.
Yeah.
Okay. So, and that's the strategy part. Broker is just a facilitator. God bless them. They take a commission. Good for them. Just don't do anything else that they say.
Yeah.
Because they do benefit when you lose, oftentimes.
That's wild.
And they benefit if you invest more and trade more, because every time you trade, guess what they get? A commission.
And there's also a benefit when stocks crash with what's it called? Is that dividends or is that the options?
Options. Oh, so that's a bit more advanced.
Okay.
So we're not going to get there today.
No. Okay. I'm okay with that.
Yes. They benefit if you use their leverage and make a mistake and lose all of your money because they take your money. They benefit when you trade a lot because they get all these commissions. And talking about brokers and facilitators, guess who else benefits from you not knowing any of these things? Financial advisors and money managers. Because, and that was my next big mistake, because back when I was in Japan, I was like, this is so great, but I don't know how to do this. So as I was learning, I was like, but I don't want to miss out on doing this. And the best thing that I thought I could do is to go and find a financial advisor. Like they gotta do, like they're gonna have my best interest. They're pros. I'm just gonna give my money to them. They're gonna invest it for me. And while I'm learning, I still wanted to learn, but I was like, I don't want to miss out. So let me go give my money to a financial advisor. This is back in Japan before all of this other things happened. And so I had just made $10,000. I had doubled my money. I had 20K. And I had a gig in Japan as well. So I was making money.
Was that a bad thing that happened, even though it was a good thing that happened?
That I made money?
Yeah. Like, or the way it happened is like
no.
10, boom, made it, doubled it. And now it's like, did that create false expectations of what it needs to always look like?
It was good and bad.
Yeah.
It was great. I mean, it was the blessing of it was it got my curiosity, which got me to this path. And then the rest of it, how it unfolded, were the trial and errors that I had to make to get to where I am. And now why I'm passionate about this is because so many other people make the same mistakes. My goal is to help them not make the same mistakes so I can shorten the road. So it took me from Japan to when I actually became financially free. This 2008 to 2021. How many years is that? You do the calculation. Actually, I'm not good at math,
13
by
years,
the way.
12 years.
12 years. Now I have members in my community who come in. They had all these things. They didn't know how to invest. They're like just stay-at-home moms. They got in and they have created $1 million portfolio. We're not talking about $1 million gross income. $1 million portfolio within 18 months.
Dang, man, I need that in my life, man. That's what I'm trying to do.
And the funny thing is, so a lot of these people come to me and they already are established. Let me tell you the financial advisor story, because so I gave my money to them and they made me sign this 50-page whatever that they give you. And I'm like, sure, you know, you have my best interest. Like, you have so much trust in them. And a lot of them are good people. And when I then fast forward to after I came to Wall Street and I lost my job. And I'm like, oh my gosh, I don't have any money. I need to get the money back from that financial advisor. And I'm like, hey, I'm sorry, I gotta take the money out. And he's like, sure, yeah, but you have to pay 75% penalty because you're taking it out early. And I'm like,
dang.
75% is like, if you had put 100K, you come out with what? 25K.
Yeah.
Unbelievably bad investment.
Yeah.
Not to mention that I want to say 96%, I don't know the exact percentage, don't quote me on this, but money managers underperform the market average. The market average is just like if you do nothing, if you have zero strategy and you just like park your money in the whole market and it goes up, is like 10, 12%. They underperform that. So they underperform that. They penalize you if you take it out, if you need it. And I'm like, are you freaking kidding me? And that is when I became obsessed to actually learn how to do this the right way. So reporting from the New York Stock Exchange, I started then after I met with like Guy Spire, inspired me to learn about actual personal finance. So I started for the CFP, Certified Financial Planning, and CFA, and all these things. And that is how I learned how to become my own money manager. And that is what I teach. Because now I'm actually in control of my money. Yeah. And even if I ever decide to hire a financial advisor, now I know who to trust and I can monitor them and I can tell their BS. And it's fascinating because now my students come in and they learn all these things and they're excited. They go to their financial advisor and they're like, oh, so you took a little course and now you think you know better than me, and they try to guilt them. And then my students would like start with a strategy on their own and they would compare their results and like, I'm literally outperforming you. And it's fascinating to watch. So one of our wins in our community is like, I fired my financial advisor. Sorry, financial advisors. That's what we do.
But that's because you're helping people become great money managers, and where most people are poor money managers.
Yes. And I wanted to circle this back to my daughter.
Yeah.
Because you talked about delayed gratification. Because that's where it's at. Because I could be doing all of these things for my daughter, but if she doesn't know, if she doesn't have the mindset of delayed gratification, she's going to get that money out at 13 and she's going to blow it up.
Right.
So what I've been teaching her, and if you have kids, if any of your audience, this is what you want to listen up now. I have been installing in her brain the value of delayed gratification, specifically when it comes to investing. So the next time your child asks you to buy a toy, this is what you're going to ask them. And this is what I asked my daughter. So she's like, hey, can we go to Disney? And the first time I had to explain to her, I'm like, okay, you want to go to Disney? Going to Disney is going to cost this amount. And you're going to be there and it's going to be gone. Or I can buy you some Disney stocks and I can keep it for you somewhere. And what happens, so of course she was like 4 when I first told her. She didn't understand, but I'm like, it's going to grow to a lot more money. So later you can go to Disney for not just 5 days, you can go there for a whole month. Which one do you choose? At the beginning, she didn't get the concept, so it was hard. But I did it over and over again with every toy, with every request. And now it's automatic. She's like, oh, yeah, I don't want this. Let's put in the stock. She doesn't even know what stock. She calls it socks. Like I actually made a video with that. My mommy buys me socks.
That's funny.
But she's getting it. Like she's finally, and now at 6, she's getting it even more.
Yeah.
And that is the best value. This is the best gift you can give to your children.
Hey, department fam, wanted to take a brief break from this conversation. I hope you're enjoying it as much as I am. And the first thing I wanted to talk about is that, did you know that 75% of the people that watch this podcast on YouTube actually aren't subscribed, which is a high chance that you're not subscribed. So number 1, I want to say thank you for listening or watching the podcast. And number 2, if you can hit that subscribe button, that would be amazing. The second thing is, if you are an entrepreneur, content creator, or somebody looking to make money online, I want to encourage you to come to this online event called the Content to Cash Challenge. This is a special 5-day event that's going to give you access to the system I use in my business to make multiple 6 figures with my content. If you've been desiring to either get your business and brand more exposure, grow a YouTube channel, whatever it is when it comes to video, I would encourage you to jump into the Content to Cash Challenge. We'll be sure to post the link to the challenge down in the show notes or the description. And I want to encourage you to jump into the VIP experience. This will give you access to a 1-hour Q&A call every day of the challenge. This will guarantee myself to answer a personalized question you may have. So I'll see you on the Content to Cash Challenge. Now let's jump back into the conversation. One of the times I really felt like super dumb was when you like learn about the companies you invest in because you trust them, or not invest in, you buy from because you trust them. Like my Apple, this is my 6th iPhone, like the cameras that I have, like there are things that I trust with the companies, right? And like, and I don't know. And then you see like, if I just, at the same time when I decided to trust Amazon with my Prime membership every year, I like decided to do that. My goodness, what are we even talking about? But yeah, I think it is just the delayed gratification thing. It's hard to see it. And that's why I love meeting people who can articulate it in a way, because I think, and because it's hard to see it, I disqualify myself from even trying to figure it out. Like, you know, I mean, I know everything's figure outable, but it just, like you said, real estate seems easier because it's just right there in front of you. You know, it's like, there you go. But then I see also the headache in real estate and tenants, if that's the case, and all that stuff. But knowing that you could, just throw money. But here's my thing though. Is that like, okay, she said, hypothetical, yeah, mom, I want to put, you know, let's just do the Disney stock. So you hypothetically, you would take what you would have spent anyway, because you would have spent it if you would have went, and then you just put that in the Disney stock.
Well, this is where. It depends. So obviously, if it's like something crazy, like it's a $20,000 thing, right now I'm not investing that much for her. As I said, I'm investing $7,000 per year for her in her Roth IRA. Of course, I have my own investments too, but it actually gives me investing ideas. Peter Lynch is one of the most iconic Wall Street investors, and he said that an average consumer is a way better investment asset picker than a Wall Street bro. He didn't say Wall Street bro. I said Wall Street bro, because they don't know about what is actually happening in the market. They're just sitting at their desk looking at the charts. They don't know about the nature. What's fascinating, I learned about NVIDIA, not because I'm this amazing investor. I learned it because my husband is a computer gamer, and he was buying, we didn't have that much money, like buying all these NVIDIA and AMD chips. I'm like, why are you spending so money on chips and you can't even eat it? And it was like, I had no idea what they were. I'm like, okay, if you're investing in these things, if you're buying these things and you're so passionate about it, and there's like a whole internet YouTube community battling about which one is better. This is 2015. And I'm like, that's crazy branding over here. So I'm going to buy it. And this, by the way, is the reason why entrepreneurs will be great investors. Do you know why? Because you know a good business when you see it. You know, you can recognize a good branding. You can recognize when companies are about to mess up. If you're a good entrepreneur, like I am, like you are, like you would have known when Facebook was about to get shaky. Entrepreneurs know that good businesses focus on one thing and do one thing really, really well. That's a great lesson for you. That's a great lesson for me. I need to get reminded of it all the time. And when I see that Facebook is trying to become the metaverse and like expand to things that was not their specialty, I'm like, uh-oh.
Yeah.
A Wall Street bro wouldn't know that.
Right.
Right? And then when Facebook lost a whole lot of money in their stocks, and they figured out, okay, got to go back to what we would do best, you would be a very happy camper to be holding on to Meta stock. So it's like little things like that. So I do take hints from my daughter, like what is she playing?
That's really
She's
good.
playing Roblox at all times. Again, this is not financial advice. Do not buy Roblox, but or not buy it. I don't know. Do your research, but like I take hint. What am I doing? What am I not gonna stop doing? Where is the world going? What is going to still be around in 5 years? You would know that answer.
Mm-hmm.
Are you going to be using AI more? Do you think?
Yep.
Are you still going to need places to live in? Now, here's a hint. You said real estate. I love being exposed to real estate. I just don't want the headache.
Yeah.
So instead of going and managing a whole real estate thing, I buy assets that have exposure to real estate. And there are some that are direct exposure. There are some that are indirect exposure.
Like?
Starbucks.
Okay.
Starbucks is not in the business of coffee. Starbucks is in the business of real estate. They have the best location in every town of the developed world. McDonald's.
There's some stuff happening now.
So then as a real estate investor, you would know. As a consumer, you would know, oh, Starbucks is having all of this negative PR. It's getting, so you know as a consumer, probably way better again than that Wall Street bro. And then also, you get to invest. This is what I love the most about being in control. You get to invest based on your values.
Yeah.
So you don't want to support a company. Most people are like, oh, I'm not going to buy their stuff. Don't buy their stocks. Now, on the contrary, you want to support a company. You're like, oh my gosh, they're like in shambles right now. Go buy their stocks. Because chances are that right now, those companies that are not doing very well, and AMD and NVIDIA had their fair share of their ups and downs that people don't even remember anymore. And I'm throwing out AMD and NVIDIA. I'm just assuming everybody knows about them.
Yeah, I mean, NVIDIA like surpassed Microsoft.
Right. It's
it's insane. And for anybody, and I feel like this was Tesla in 2020, like, for anybody who you wish you got them at the bottom and now they're at the top. But here's my fear always. Once they're at the top and now I'm like, okay, they've proven themselves, but now I'm late to the party. So I'm like, I don't want to do Tesla because are they late now? Or would it be late for me to jump into Tesla, or would it be late for me to jump into NVIDIA now that they're at the top? And it's like, that's one thought process I get.
Yes. So the question that now you ask yourself, all right, so yes, NVIDIA had amazing growth and it might have slowed down. Now, first of all, there are tools that you can go and find out other value assets. But that being said, I'm going to ask you a question. Do you think AI is going anywhere?
No, I mean, it's only going up or increase of usage.
Are there any other companies that have exposure to AI other than NVIDIA?
Probably most of them.
So here's one. Now we're going to start getting a little bit more deep into this. And this is an analytical skill. It's a skill, first of all, that you can learn. But again, entrepreneurs are the best at this. Because yes, everybody wants to say we have AI. 70% of them are BSing. They're using ChatGPT and pretending they have AI component. So we want to find, they call it when there was this gold rush happening, people were doing the shovels.
Yeah.
You want to find the shovels. All right. And I can't just tell you what they are. # not financial advice. But there are a handful of companies who are directly investing in one of the AI companies that you probably use every single day. Which one is it?
I don't know.
What do you use nowadays to make your life better? You ask them questions. They have answers for you.
Like Siri and Google.
And Google, perhaps ChatGPT.
Yep.
Right?
Is ChatGPT at stock?
So no, they are not a public company, but there are companies that are investing in them and are partnering with them. So you're going to find those partners. How? ChatGPT, or ask Google. Hey, what are the companies that are partnering with ChatGPT? In fact, when you find, so this is how I choose my stocks. When I find a company that I'm, oh my gosh, this is the best thing since like sliced bread, if you will. Like the first thing you want to do, and I do, is that I go to Google, type out their brand name, and then stocks. So for example, let's say you just discovered Tesla. So you go and type Tesla stock, or is Tesla publicly traded? Because that's the way that you can access them.
Mm-hmm.
And if it's a yes, great. Now you know that they are. You go to your broker, and there are some other steps that you can optimize your purchase, but you're now one step closer. If they're not, then you ask Google, what are the companies that are partnering with this company or are somehow invested in them? So ChatGPT, we know Microsoft, we know has invested in them. We know Apple is partnering up with them. There's so many companies. There's a list. Some of them are publicly traded, meaning that you can actually buy their stock. Some of them aren't. So what do? I go on, buy the stocks of those companies. Another company that is very hugely and is one of the pioneers in AI is actually Meta.
Oh, okay.
So Meta has one of the best algorithms. And now, as an entrepreneur, you would know if you run ads on Meta, you know their algorithm is genius. So.
And then as far as buying stocks, like how much do you know how much you should buy? So like, let's just put a hypothetical situation. Okay, now Omar is persuaded he's going to start investing into stocks. Let's go. Robinhood app, downloaded, log in, connect to the bank, whatever. And then now I'm like, okay, sweet. Like I feel like based on what's happening, and in all honesty, one thing I feel like I maybe work through because I've put money, trying to get money quickly, that like, dude, when I see reds, in my mind, I'm like, now's the time to buy, right? You know? So let's just say I see like, okay, dude, whatever is going down, it's going to come back up. How much at that point is it like, I don't know. Is it $1,000? Is it like throw 10,000? Is it like that, the thought process behind how much am I buying?
Love that. We're getting technical. Are you ready?
Yeah.
We're getting to the tactics. Okay. Get your notes out.
Yeah.
So the first thing, how much do you even fund your broker account? So that is a very important number.
Because you have to first put the money in there.
Right. And how much do you
it.
put? And for everybody is different. So that is where we get to the technicalities of it and personalizations of your strategy. And this is what majority of investors don't do, and that's why they don't make it out alive, literally, and it's not understanding their risk tolerance. What is your risk tolerance? It has 3 components. It is your willingness to take a risk, which an entrepreneur is like, yeah, I'm so excited, let's go all in. Then you got your ability to take a risk, and then you got your confidence. Your willingness to take a risk, there's a bunch of questions you can ask. I can actually gift your audience if you like with my risk management toolkit. It's your psychology. It's your stage of life. It's, I had a very high risk tolerance when I was broke as a joke, but I was single. I don't have anybody to play out. I would like eat. I knew, all right, so here's the thing. Like I would go on dates to eat because I didn't have money. So, but I was like, okay, if I don't have money, I can figure out a way to eat. Right. And I was sleeping on my friends' couches. I didn't have any dependence. Risk tolerance was high, but ability to take a risk, I was broke as a joke.
Okay.
I had only $500. Okay. And my confidence, so we have now confidence in myself, in my knowledge in this, which you are going to have confidence in yourself once we're finished with this, and then confidence in the asset that you're investing in. So these are the 3 things that you have to predetermine before you do anything. And based on that, you're going to figure out, okay, so risk tolerance, your ability to take a risk is your financial situation. First, what we want to do, we want to figure out what they call an emergency fund. I call the peace of mind pot. So all the money basically you calculate it, but based on, okay, this is my necessary expenses every month for my family. And as a business owner, you're going to have 2 emergency funds, 2 peace of mind pots. The minimum amount of money that I need to run my business, plus the minimum amount that I need for my family to be alive. You calculate that, and then you multiply it by, again, depending on your stage of life, by 5 or to 12.
Minimum amount of money
of necessary expenses.
Right, like what? Like 6 months, Dave Ramsey, 3 to 6 months.
Right.
Whatever.
Right.
Okay.
That he gets that one right.
Yeah.
So that's good. The rest of
right.
it, I don't agree
No,
with it.
Yeah,
But
he's
so this
definitely
is
not
where we
about
want to
investing.
put, and so again, so if you know, like now this changes based on your ability to bring in money. So if you're like, oh my gosh, I'm an entrepreneur, I can just flip out a Facebook ad and I can just make a ton of money whenever I want. Your ability to take a risk is higher because like
Right.
you can get away with a 3 months emergency fund.
Yeah.
But will your business survive? Like how many people do you have to keep paying?
Right.
So
But you say take that number though.
take that number, that you don't invest, that you put in a high yield savings account
Yep.
and you keep it. That's your peace of mind pot. You want to need. You are not going to touch that.
That's good. And I'm glad I did that. Oh, we did that. So all right, let's go.
One step.
By the way, that did something in my spirit. Like John the Baptist in the womb, his spirit it leaped in his mother's womb. Anyway, is when I saw after a month of putting the money in the high yield savings account, it was like $500 because we put a lot. We put like $100K in there, and then I was like, "Dang, that was the easiest $500 I've ever made in my life." Like honestly, and now in my mind, I was like, if I can just put $3.5 million in here, then I would make $150K a year without even lifting a finger. Thing is though, what scares me is the threshold, the $250K. Past that, I'm not, it's not insured.
Right. So I'm glad that we're talking personal finance. So here's how you go about it. First of all, high yield savings account is great when interest rates are high. They're now talking about cutting it. So when it's lower, you're not going to get as much. And last year was even better. And I do max out my high yield savings account, not only because it is my emergency fund. And the way to go about it, if you want to have more, if your emergency fund is more than $250K, which mine is for my business and for my family separately, you find another one.
Oh, so you're insured in the one.
In the one, but be careful because some of these banks on the back end, they are actually connected. So the $250K is whatever the parent company's threshold is.
Okay.
So the other one, I put in a different company that is not related. So I have Discover and American Express. Yeah. Again, I'm not like these are the two ones that I'm using.
Because I thought this. I was like, yeah, we went with American Express, and then we learned that there's another one. But I was like, okay, cool.
So you want to make sure they're not connected in the back, and then you can cap it as much as you want. So fine. And then there are some crazy plans like high yields that pay you even more, but they could be a little bit risky. So I wouldn't use them for emergency fund. Good. But so that's the first step.
Great. That's what, and my friend said, because like I was telling you, I lost a lot of money into a Ponzi scheme last year. And I've learned a lot of people that are doing significant stuff. A lot of them have a big loss in some way, shape, or form. And that loss, really, it was a lesson. And to not take your hard-earned money and risk it in investing in yourself, or make the risk in your business because you're the variable that you can control. Definitely a lesson that was very expensive, but I'm glad I learned it at that level. So I say all that to say, okay, 3 to 6 of monthly for business and or personal, and put that in a high yield savings account.
Yes. And then now after that, you have actual monthly expenses.
Yep.
You're going to pay them. For me, everything out of that goes to my investment account.
Everything after that?
So I pay my mortgage, I pay for my lifestyle, I do all the things for my business, I pay for my Facebook ads, I pay for whatever it is. And some people are like, oh my gosh, you can just scale and put it back in Facebook ads. No, there are thresholds. There is a time in point, like I'm so obsessive about my Facebook ads, I do not let it go below 2 ROAS. If you're an entrepreneur and you know what that is, it means if I put $1 in, it has to double or else I'm stopping. That is the cap. Yeah. Don't go just blow up. That is how a lot of entrepreneurs literally are broke. Right. Because they just go blow all their money in the Facebook. No, there's a threshold. You need to be on top of your ROI, your advertising ROI. So when I cap that, I pay my team, I do all the things for my business, all the events, all done. Everything that is left over goes directly in my investment account.
Good. And an investment account, I'm trying to paint pictures in my head. So if I get Robinhood, it's like there's a pool of money.
Yes.
So you're putting money in that pool.
Yeah. No, right now you're just funding it. You're not invested yet.
Right. But it's sitting in the account.
Sitting there.
Okay.
Yes. So that's why you want to invest.
Yeah, I didn't even know that. I thought you just throw it at Tesla. But it's like, no, I need to have 10K in the thing to even throw at Tesla.
Yes.
Okay. But you're saying you put it in your monthly or normal practice.
So let me get to the next steps. So I fund it. Okay. And typically you can even automate this because you know your monthly expenses typically. So you know how much you can actually automate. Then sometimes some months I make more money, so I put more money, but my base of how much I contribute, I automate it. It's kind of like taxes. You forget it. When you don't see it, you don't miss it.
Mm-hmm.
It's the money that's gone there.
Okay.
And then, so here's where it gets a little bit more tactical. And I'm not sure if you're ready for it. So
I'm ready. No, I'm writing stuff down.
All right. So you have chosen, let's say, 5 assets that you're interested in investing in.
Can I tell you what I think is right now?
No, we're not giving financial advice.
No, just what I think.
Sure.
And just say yes or no. S&P 500.
Sure. Yes.
Sure or sure.
It's a sure for me.
Nvidia.
Sure.
Tesla.
Eh.
Okay. Apple.
Sure.
And then, And then Amazon.
Sure.
LVMHF.
Is that Louis Vuitton?
Yeah.
Sure.
Okay. Those are just the ones that are on top of my mind.
Louis Vuitton is one of the best brands. They own everything.
Right.
They own Tiffany's. They own every brand on earth that you've heard of besides Chanel. I want to say it's just crazy how big they are.
Dude, I'm paying attention, because I'm a consumer.
But here, beautiful. I love this. And so S&P 500 is what like most Instagram gurus are like, oh, just put the whole market. And it's great if you want to be super lazy, and it's fine. It does underperform the best performers. Yes. But if you're fine with that, just put it. So this is how you get exposed to the S&P 500. You buy, it's called an index fund. It's called VOO, VOO.
Yep.
And then we talked about dividends. Let me give you another one.
VOO.
I forget the
were you saying the S&P 500 it sits in a VOO, or is it VOO an app?
I'll explain.
Okay, cool.
Okay. So basically, so there are a lot of companies that allow for their equity to be investable by us. That's called a stock. Yep. Okay. And they're all in on the stock exchanges, whether it's NASDAQ or New York Stock Exchange, they are housed there.
Okay.
They're there. And there are 500 of these thousands of companies so there are 2 people that are actually managing this fund, the VOO, right? S&P 500 is Standards & Poor's 500 best companies that they choose.
Yep.
And this index fund, this VOO symbol that I just mentioned, tracks those best 500 companies out of all of these other companies. And it changes. So right now, like Nvidia is within them, we can go and see like what are the companies under S&P 500. There are 500 out of 2,000. Wow. Okay. So that is your indirect exposure to the S&P 500. There is another one. It's called Russell.
VOO is an indirect stock.
You can call it a stock as a basket.
You can call it
a basket.
Great word.
And it's just tracking like all of them kind of relative to each other.
Okay.
Right?
And then the next one.
So this is one. Index funds or ETFs, they're 2 different things, but they're kind of similar. And there are fund managers. There are low-cost fund managers, funds, right? So we have mutual funds that underperform the market.
Yep.
And we have ETFs that many of them underperform the market. But then we have like specific ETFs. So you're like, oh my gosh, I'm interested in the category of AI. I don't know which company to buy. So I'm going to let another Wall Street bro create this fund. Okay. And I'm going to let them choose how much NVIDIA they're going to buy, how much this. And then they are like, okay, I'm going to put 20% in NVIDIA, 10% in this, 5% in that, 2%. And you let them handle that.
Okay.
That is an ETF. ETF.
ETF is just, I want to invest in the idea of a thing.
Yes, and they're managing the whole, like, they're managing, you are basically funding their portfolio. You're giving your money to them. They are managing your money for you. They are deciding what to buy.
Yeah, okay.
You're trusting them. And of course, coming from my background, I don't like that, even though like VU is one of the most trustworthy ones. If you want to invest in something you mentioned before, dividends.
Dividends.
So dividends is the free money that many companies give you every 3 months just for holding on to their stocks. Why dividend stocks are amazing, especially if interest rates go down. I have actually switched up my strategy now to focus more on dividends, is because not only you're going to get the free money, but you also are exposed to this upward, like the stock would also do well. So
yeah, there's double-edged sword in a good way.
Right.
Okay.
And then so sometimes so dividend stocks, sometimes it's kind of like a bribe for you not to sell their stocks. So they might be crappy companies. So you want to choose the right ones.
What's an example of a dividend stock?
Dividend stock, some of the best ones that I hold include this company called AbbVie. Microsoft pays a dividend. A lot of defense stocks pay dividends. Lockheed Martin, Northrop Grumman. Oh my gosh, I got it. We have Raytheon. Costco pay dividends.
Ooh,
Walmart pays dividend.
I like Costco because I love Costco.
Yes. And so here's my beware risk. So for example, GE back in the day was one of the highest paying dividend companies, and they were too big to fail. And then they did fail. They haven't completely fallen out of the market, but they did cut on their dividends. And that resulted in their stocks also dropping because everybody was investing in GE because of their dividends. Once they cut their dividends, their stock also dropped. So it was a bloodshed. Okay. So there is always risk involved. Like, sure. I want you to understand that. That is why you put your emergency fund. That is why you just don't jump and buy whatever I said right now.
Right.
You need to be aware. So I have a lot of amazing performers in my portfolio. I also have some really bad performers.
Sure.
My worst investment ever was Peloton.
Oh, wow.
And the crazy thing about this is that my students were telling me about Peloton before Peloton was super big. And they were like, and I'm like, I never used to work out. And I'm like, oh my gosh, like I did not want to even hear about it. And I felt like everybody who talked about Peloton were just like oh, I have a Peloton. I'm like, all right, you're not my kind of people. Until my husband actually bought a Peloton and it actually forced me to work out. It was the first time I actually enjoyed it. I hated going to the gym. Like I did not want to get out of my house and go to the gym. It was such a blessing that I'm like, oh my gosh, I'm going to buy Peloton stocks.
Mm.
But I timed it extremely bad. I bought it at the peak of the peak of the peak, and I'm 80% down.
Okay.
Now, obviously I'm upset about it.
Sure.
But here's why I'm tolerant of it. Because I invested in something that actually changed my life. By investing in them, I actually supported them. I invested in something that was aligned with my values, and it might go back up again. It may not. But at least I have that peace of mind that I was in control. I made this decision. And I'm going to teach you a fascinating trick that is going to put your emotions in check. And you're going to just ask these 2 questions from yourself before you invest. And then you're going to forget. You're going to go in. You're going to say, okay, because of this, I'm investing in this. You're going to put it in your journal. And then you're not going to look back.
Okay.
This is what we mean by confidence. This is a very important component of your risk management. Are you ready for the questions? So I call this the confidence compass questions. Okay. So let's say you want to buy Tesla. Who runs Tesla? Elon Musk. One of the most brilliant minds. How many times has he flip-flopped in his journey? 1 billion times. Is he emotionally stable? Maybe not. Are there other competitors of Tesla? Many of them are around. Tesla is still dominant. All right, let's think about it. So I've just seeded you some different things. Where are we going? What's the direction we're going? Definitely electric vehicles. Is Tesla going to continue to be the category king? You tell me. Okay.
Well, they said that they want to supply everybody's batteries.
Yes.
Right. So it would be that idea, I guess. But
I also look at, as an entrepreneur, I do care about the attractive character.
yeah.
If you know the leader of a company and how stable they are and what is the vision and what other interests they have and are they focused on one thing or not.
Hey, question for you. Are you somebody who is looking to start creating content, or maybe you currently create content, but all the gear and the tech just overwhelms you? If so, I wanted to let you know about our sponsor for this podcast, Ulanzi. Whether you're creating content with your smartphone, a camera, or just trying to take your Zoom calls to the next level, Ulanzi has everything you need to make your setup look and sound professional. I've been using their gear myself, and honestly, it's been a complete game changer for my content. You can check them out at ulanzi.com/Omar, and we've got some amazing picks for you. And also, if you look at the description below, we have a special promo code that will give you 12% off your entire order. Big thanks to Ulanzi for sponsoring this episode and helping us create. That's actually a great, yep, good wink.
So, and I've made so much money on Tesla, but this is one of the exceptions I'm going to tell you that I haven't just hold on to it long term. So every stock has patterns, just like every human has patterns.
Every stock has patterns.
And they have their own personal patterns. Apple has the most beautiful pattern. It goes up, and then it reaches a certain percentage, and it drops exactly 50% of what we call Fibonacci. Don't get lost. It's a Fibonacci retracement level. Then it goes back up. This was the Apple's pattern for 20 years. It was the most beautiful.
So it's like this and then like this. Yeah. Okay.
And you could literally buy here, sell here, then wait for a pullback, buy again, sell here, wait for a pullback. Wow. Beautiful. So pattern recognition is one of the skills investors must learn if they want to do it the not so lazy way. And I do this, by the way, when I say not so lazy way, I manage my 8-figure portfolio. Guess how often?
Every day? Once a week? Never. I'm just kidding. Once a month.
Once per month.
Wow. And by manage, you're like looking.
I'm looking. And I do it as an entrepreneur with my members. We brainstorm. Then I literally go to my portfolio. I see what's up. I see what's down. I look at the charts. I look at the fundamentals. We do some research. And I'm like, all right, maybe I want to buy more of this. So I've already automatically funded it, right? Yep. So I have money to invest.
Yep.
And the next step, I know I've kept you hooked on my confidence compass questions too, but the next step is what price to buy. So before I tell you my confidence question, I want to ask you, and I'm going to teach you about what price to buy, because you said it best. Like, NVIDIA is so high. Like, what if it drops? What if I buy? First of all, I'm late to the game. And what if I buy and it crashes? How many times have anybody in the audience here bought a stock just to play with it and it dropped? This has happened to me so many times. And the other day we had a new member who literally joined us, and she was panicking because she's like, I was in this WhatsApp group. They told me about the stock. I bought it and they did drop 80%. And I'm like, yeah, obviously they do that in these WhatsApp groups. It's called a pump and dump. They talk about a stock. Everybody goes by it, and then they dump it, and the markets crash. They sell it.
Was that GameStop?
Yep, GameStop is one of them.
Yep.
Oh, so many of them. So what do you do? And why do I stay and look at my screen all day and wait for it to drop? Because you said it, you want to buy it when it go red. It's a great time to buy. But I'm an entrepreneur. I'm a mom. I have a job. I don't have time to stick to my computer and see when it drops to buy. I don't have that kind of time. So what do? Magical. This is where the broker comes in. So I have a system, first of all, that kind of shows you this pattern that I was telling you. And every stock has its own personality, and you learn it, and then it becomes like riding a bike. Oh yeah, I can see this. Oh, this is like that. So you get it. And I have some indicators as well that help me understand how low it could drop, or if it's at all-time high, how low it's going to drop, or if it's at the low level I'm about to sell, when to sell. So it kind of magically shows you the prices. And there are multiples, right? So let's say, just like throwing numbers out, let's say Nvidia is at $100 and you're thinking, okay, I don't want to buy it right now yet. I feel like it might go a little bit lower. And when you look at this system that I'm telling you about, you'll kind of get that feeling. I think it's going to go to 96. So what do? You tell your broker, kind of like what I did in Japan. You tell your broker, hey, can you please buy Nvidia for me when it reaches 96? It's called a buy limit order. Now, you're like, how much do I put there? So I allocate. So let's say you're investing 10K, 5K per month, and I have 5 assets that I want the most amount of exposure to. Like, these are the assets that I'm the most confident about. So I just divide them evenly. Like, okay, 10K, I'm going to put 2K here, 2K here, 2K here. It's just the exposure of it. And then now my strategies might be different than yours because I have extremely low willingness to risk. Like my ability to take a risk. I have
zero strategy.
Keep going. But so you're going to develop yours. Yes. And this is how you develop yours.
Yeah.
Because my willingness to take a risk is like after I became a mom and like now I'm responsible for like my employees and like this people, like I don't like taking risks.
Yeah.
So I not only tell my broker, like I don't rely on one price. I set up to 3 buy limit orders for the same asset. Now, I already own thousands of shares of Nvidia. So I'm not in a rush. If I'm like really excited about an asset, I might like just buy some at the current market price and then set the buy limit orders. But if it's something that I already have and I'm like, I want to have more, I want to add on to it this month again, or whenever it reaches that price, I set up to 3 buy limit orders. And now we get to the confidence compass questions. At every price, or even if it's at the current market price, before I buy, I first ask this first question. Are you ready?
Yep.
If I buy right now at $100, if I buy Nvidia right now at $100, and tomorrow I wake up and it's dropped to $50, it's dropped by, it's like half price now, how would I feel? Would I be like, oh my gosh, this is the worst thing on the planet. Like, why did I do this? Or, oh my gosh, great, I'm going to buy more. It's up to you. There's no right or wrong answer. Feel that. This is the only time you're allowed to be emotional. This is the only time you're allowed to be emotional in investing, all right? Then you ask your second question. You got your feeling? You know how you feel?
I'm like, that's a bummer.
Now, if I don't buy right now, and tomorrow morning I wake up and Nvidia went from $100 to $200 and I missed out.
Get the Glock. I'm about to shoot myself. No, I'm just kidding.
So you got the answer.
Yeah.
You got the answer. Both of them feel crappy. Which one feels crappier? Don't do the crappier one.
That's crazy.
And you write this. Now listen to this, because your future self is going to forget about this. And the actual thing happens and you're going to forget, because when the actual thing happens, it's always going to feel even worse than what you thought you felt right now.
Yep.
So you write this in your journal. This is my strategy. This is why I'm buying Nvidia right now.
Yep.
And you write this for the future reference.
Write down your why. It's good.
Right? And then I do it for each and every buy limit order. And if I'm like, you know what? I have so much Nvidia. Like, I really just want to add on to it if it's like real cheap. So just bring to a lower level. Like, there are so many levels
it's
that you
like
could hit.
automating investing.
Yeah.
Yeah.
No, that's all it is. And what I love about it is because then it takes the emotions away.
Right.
I literally set this and forget this. I go about my day. I go to the beach. I go hang out with my daughter. I go like on a date with my husband. Like,
I have a scenario. Yeah,
I do all the things. And then, I mean, before I used to get excited. I used to get the notifications when the buy limit orders went through. Now I don't do that as much anymore. Robinhood sends you the notifications. It actually makes a big deal. I was like, congratulations, woohoo!
No, I think about like, here's a situation I feel make me feel like crap is like setting my buy limit and it barely didn't get it. Yes. And then it goes right back up. And then
yeah. So we have a strategies for that because like the buy limit order, typically like if I really don't want to miss out, I bring. So you just said that you really don't want to miss out on this.
Yeah.
Now let's say, what is a company you hate?
A company I hate?
Or goes against your values?
Goes against my values. Whatever.
Or if you don't want to
whatever woke company there is.
Okay, a woke company. Mr. Woke. Target. All right. So what if I told you, hey, I know you don't like this. I want you to put your emotions aside. And like, again, this is hypothetical. All right. I say, hey, Target is like literally the next thing. This is going to skyrocket like crazy pants. I want you to, for a second, like stop thinking about politics and just think about the amount of money you're going to make with Target. You're still like, you know what? I really don't like them, but okay, yeah, whatever. But I only want to buy them.
By the way, I love Target.
Cheap. I know.
My wife loves Target, but they'd be crazy on whatever.
I know. Okay. This is a completely made up story.
Right.
And let's not even say Target, because Target, we love you. I own your stocks. Like, please go up.
Target.
But
okay, so yeah.
But so in that case, you're like, yeah, but I'm still not like, I'm not like, it doesn't align with my values. Like a lot of my students, and I used to like not like defense stocks. I'll tell you, it's a different story for a different day. Back in the day, I didn't like them. I'm from Iran. They used to drop bombs on us. So like, I don't want to, now I have a better appreciation for them, but I wouldn't invest in them. I would only invest in them if it was like really low. So in that case, I would set my buy limit lower. But if it's like something I really love, you just, even with the buy limit order, whatever the chart showed me, I bring it even higher. I bring it 5% higher. See what I'm saying?
Okay.
So, and that way, because what a buy limit order really is, the markets move because of psychology, market psychology. That's all it is. And a chart that you're going to learn with my system is just literally is a printer of the Wall Street Bros psychologies. So you can see them. Oh, they were so excited about it. Oh, and then they weren't so excited. And then all of these ups and downs kind of create peaks and valleys.
Yeah.
And because everybody's seeing them, it works again and again. Like if you were like a Black Friday specialist, you would know like, oh, I know that like typically they drop their TV prices by this much. Like, you know, the price, kind of like that.
Okay.
But if you really don't want to miss it, you'll just jack it up a little bit.
Did we hit all 3 questions of confidence?
Oh, so the 2 questions, there are 2 questions if you're buying. And then when it comes to take a profit, which I typically do after a year for tax purposes.
This is about paying yourself.
Yeah. So paying yourself comes in different ways.
Okay. Because I wrote that down. Like, how the heck do you pay yourself?
The best way that I love that all the billionaires do is you don't even sell, because when you sell, you have to pay taxes. Who wants to pay taxes? Borrow against your portfolio. That's how we bought our $10 million house. I did panic a little bit. I sold some of my NVIDIA, which I'm still kicking myself. But we borrowed the whole down payment from myself.
Okay.
And the rates on this are lower than what the bank would have loaned us. So that's how you pay yourself. This way, you're not selling, your portfolio is still growing.
But let's just say, like, can I give you my hypothetical situation?
Sure.
Like, let's just say I want to make 150 to 200K a year at some point, like without having to work, right? And I feel like I'll always work. I'll always have this podcast, because why not? You can do this when I'm 80. Anyways, that's why you just start a podcast, by the way. Okay. So like, it would be really cool to just like 200K. So I'm not going to pay, I'm just going to get a $200,000 loan against myself this year.
So I love this question. So this is for a lump sum. Again, I wasn't thinking that. I was talking about like the young kids. So first of all, would you like to know your financial freedom number? And then I'll tell you how you can use it. Would you like to know
it
how
keeps
much?
changing, but yes. Or you have a formula to figure that out.
There's a formula to figure it out. The financial freedom number is that at retirement. So 80-year-old Omar sitting here is like, okay, this is going to be my lifestyle. I'm going to have a yacht. I'm going to have this. And I'm going to have my podcast. And this is going to be my lifestyle. You're going to calculate that per month.
What was the word you just used?
calculate.
Oh, calculate. Sorry, that was
calculate.
Just no, that was just the accent.
It's all good.
I just want to make sure because these terms I've never heard before. You know?
You want to.
Okay, calculate that number.
Write it down. All right, so I got to pay off my yacht. I got to pay off my jet. I got to pay off this. I got to pay off that. Right.
You already know 80-year-old Omar.
Right. Right. So this is what it comes down to. So you have like 1 month of that. You're gonna multiply that by 12. Now you have your annual retirement expenses.
Sure.
And for some people, it's actually lower because they've already paid off a whole bunch of things.
Makes sense.
And so that is your lifestyle number. And then you divide that by this 0.04.
Yep.
Okay?
Yep.
And the number is your financial freedom number. Like if your lifestyle number per month, let's say, is 100K, your financial freedom
month number of months is 6.5. By the way,
Alexa, stop. That's hilarious.
Okay. If your monthly lifestyle is 100K, your financial freedom number, it's like 3 million. 2.5 million.
2.5 million. Okay.
And this is beautiful because it is keeping up with inflation. Now, in this case, do you remember when we talked about dividends?
Yes.
So my dad, who is 80 years old, evidently, and he started this 5 years ago. I started this for him 5 years ago.
You started investing for your dad at 70 when he was 75?
Yeah,
wow.
Yeah. And so guess what I invest for him now, mainly? Dividend stocks. So I have created this strategy for him that, because different companies pay dividends at different months.
Okay, this makes total sense now.
Every company is paying you every quarter.
I got a journey still. But okay, yeah. So because he has less time to enjoy the fruits of his, investing. Okay, you're doing dividends to kind of speed up some of those
not
outcomes.
Only that, but we could take those dividends out, and that is going to pay for his lifestyle.
And you don't sell dividends.
No, you get them.
You get them
for free. It's free money.
But you sell stock.
You sell a stock.
Or you borrow from your stock.
Or you borrow.
But you get dividends.
The dividend is like free money coming back to your account, which you can, again, either reinvest or take it out.
Yeah.
It's kind of like your high yield savings account.
Seems awesome.
Dividends are amazing.
Why is everybody talking about stocks? Forget stocks.
Well, no. Stocks pay you dividends.
Okay.
So there are stocks
that pay dividends. Dividends isn't a stock.
Yes.
Dividend is the thing you get paid.
Yes, dividend is the free money that this company, let's say like Microsoft, pays you for holding on to their stocks.
And they pay you based on how much you're holding?
So it's a percentage of their stock price.
Okay.
So obviously, as it gets higher, you're going to get paid higher. So for example, Lockheed Martin is one of the best ones because first of all, it's defense with everything the world is going right now.
What is that one?
Lockheed Martin is the world's largest. Lockheed. LMT is the symbol.
LMT.
Hashtag not financial advice.
No, but like these, and then the symbol, like when you type it into the thing, would it show up?
Right. And I wanted to tell you about this ETF because we were talking about, hey, what if I didn't want to choose the stocks myself? If we wanted to invest just in that basket. We talked about VU before, which S&P 500. There is a dividend ETF that is amazing.
This is so cool.
So this is Schwab.
If I got anything out of this conversation, which is so much, is like dividends, bro. What are we talking about?
Bro. So this is the one you want to invest in. This is called SCHD. It's Schwab US Dividend Equity. So this one has some of the best stocks that pay dividends as well. So you can just buy this one. This is the lazy way of it.
Okay. In 5 years, how much has your dad, like what is he making like?
So I put it together. So we have a different situation. Like I'm not actually taking it out. I could have.
Yeah.
I'm actually combining it with my portfolio so that I actually keep investing it. But so his necessary expenses are really low.
Sure.
He's $1,000.
That's $12,000 a year.
Yeah. So $1,000 per month in dividends is like, so I've invested for him. I have to look at the numbers again. Math is not my thing. But so I calculated it and I basically put together, so we invested the amount of money that in the amount of companies that pay dividends, that the total of the dividends per month would be $1,000.
Yes.
So, and the dividend yields, as I said, so that is a percentage of the price. So if it's like, I don't know, 3% yield dividend on a price, let's say, I don't know how much Microsoft is right now, but let's say Microsoft, $100 and they pay like a 1% dividend. That's like $1 per share. of that company
Yes.
that you own.
Okay.
So if you have 100 Microsoft stocks, you're going to get paid $100 every quarter. So it's not a lot. So it has to.
But the whole point is for it to mature.
Yes,
and
and you have to keep, because then it compounds, right?
Right.
If you reinvest it then, so you can automate the reinvestment of the dividends, which means you tell your broker, hey, every time I get paid, put it back in the same stock.
Right.
I don't do that because I want to do it strategically. I want to buy at the buy limit orders and I want to set those. But again, if you want to make it lazy and just this is called a dollar cost averaging, by the way. You just reinvest the moment you get paid.
Yep.
You could do that too.
Wow, that's so good. Okay, I'm going to look into dividends. Okay. Can you tell me how long it might look like for me to see like that what I'm doing is working based on my personal situation without offering financial advice?
Right, but what do you mean by working?
Great question. I don't know, like that from the money I put in, it's more.
Right.
Yeah.
So here's where I call it my Invest Diva diamond. So Invest Diva is my company. We have a diamond symbol. It has 5 steps. And I basically walk you through all of them, but one, which was the second step. I surpassed it. The first step is capital analysis, which is your risk management. You're going to do that. You're going to get my toolkit. You're going to figure out your risk tolerance.
Great.
It's personal. The second step that we didn't do is intentional. So what is your intention at this stage of life? And this is where you break down your goals. Your 1-year goal for this, your 3-year goal for this, your 7-year goal for this, your retirement goal for this.
Yeah.
Because for each of these goals, you could have different strategies. If you're like, oh my gosh, I need to make money in a year, which I don't recommend,
Sure.
You're going to have a little bit more actively involved investment strategy. If you're like, oh, I just want to let it, this is for 80-year-old Omar. Like, this is your gift, future self. I'm going to let it run. That is going to be a different strategy. Or you might have a combination of both, or 3, or 4, right? So for my daughter, her portfolio looks drastically different than my dad. My dad is 80. My daughter is 6. Like, I don't care if I invest in something that is a little bit riskier for her, but might like shoot up in 20 years.
Yeah, right.
Right? But for my dad, I do not have that luxury. I do not risk my dad's money. Like, It's just like the most stable, the most boring. The growth may not be as great, but I know it's not going to go down if he actually needs it. So different strategies. So that is the second point. Then is third point we talked about is fundamental analysis, where you go and build your list of assets that you want to invest in. You're going to get 5 to 10 assets, not more, when you're starting. I have 200. Don't do that.
Wow.
But again, yet I manage the 200 assets an hour per month. When you get used to it, it's like so
it's really
fast.
cool. It's like an art form.
But at the beginning, it's like don't do more than 5 or like max 10. Okay. Third point, fundamental. So we had capital, intentional. Then we have fundamental, picking the assets. Then we had technical, which is figuring out how low this price can go with the system that I was telling you about. It's a Japanese system, by the way. And then, I didn't tell you about the last point either. Sentimental. I kind of tapped on it, but market sentiment. The markets move because of market psychology. It has nothing to do with math. It has nothing to do with the earnings report as they want you to think. It has everything to do with that finance bros, Wall Street bros, emotions that day. A lot of times you're like, oh my gosh, NVIDIA had great results. Why did it drop? Oh, finance bro had an emotional breakdown because he anticipated, he thought they're going to do even better and they didn't do as good as they thought. So it drops. Now the stock is dropping. It's very emotional and it's so transparent. Another thing that impacts the sentiment of a company or a stock price is the PR issues that is going on with it.
Mm-hmm.
And so Chipotle is a great example. You know Chipotle, Mexican grill?
I love Chipotle. Mariella, not so much.
Love it. I loved it too. And I think it was 2017, 2016, or I don't remember when it was, that they had this foodborne disease, like illness that everybody was getting sick. Remember that? Oh my gosh, the media was trashing and people are like it was just crazy pants stuff. The stock was crashing. People were never going away. People are getting sick. Some are dying. And I'm looking at this. I'm like, okay, I love Chipotle. As an entrepreneur, I know any PR is good PR.
Yeah.
And the stock is cheap. Guess what did I do?
Balled out.
I set buy limit orders because I could now calculate how low it could drop to, because it would drop to that floor that was previously set in the years before. Bought it. In 18 months, I made $30,000. It's not instant. It took time for it to go back up. But it took me 5 minutes of setting that buy limit order and then going away.
Yeah.
And then 18 months later, 30K is not too bad.
Yeah.
For 5 minutes of work, divide that 30K by 5. Like got paid like $6,000 per minute. It's pretty good.
Yeah.
I like that.
Pretty great. Yeah, that's amazing. So
those are the 5 points of the Invest Diva Diamond.
Thank you so much. This has been so enlightening. I think it's like taxes. Like when I made my first like $100,000 in business, my tax bill was like 27 grand. And I was like, that's all we had in savings. And I was like, the most money the year I've ever made, and I'm broke, And so it led me on a journey. And I love listening to tax strategy. And I'm pretty well versed, I feel like, at this point, but I realize it's a never ending thing. And I need to hear it multiple times. I need to hear it said the same way. And I need to hear it said a different way for it to really become like such a second nature type of, way of thinking. And I think that obviously with stocks, it's kind of the same. Would you say to this question, should absolutely everyone invest in the stock market to some capacity?
I'm going to look into your eyes and say this. Yes, 100%. Everybody in your family needs to be investing. If there are minors, you should be investing for them. If they can't have a Roth IRA for minors because they don't have a job, it's okay. Put it in a traditional account. The only benefit that a Roth IRA has, that you still have to do all the 5 points that I said, it's just a different type of account that is tax beneficial. It's great. Even without the tax benefits, a traditional account will do. Because Roth IRA, also, one thing that I would say about the Roth is that if you want to take it out prematurely, you would have to pay penalties on the gains.
And then you just and who do you find to start a Roth IRA?
The Fidelity, Charles Schwab, all of them have it.
Okay.
Like, these are different types of account. These are the technicalities. A normal account is not tax beneficial, but you have the most amount of control. Like, if you actually absolutely need to get your money out and sell everything, you can. Yeah. There is no penalty. You only have to pay the taxes.
Yeah. It's sad though. Like, it's sad. So you as a expert when it comes to this stuff would say, yes, absolutely everybody should invest in some capacity into the stock market. Then why the heck do they not teach this stuff? And it's the same with taxes, but like, good night. It really shows the programming, unfortunately. And so like, here I am doing pretty well at life. I would consider myself financially free in the sense that I don't have to worry about, I don't have a money issue. Like, money doesn't stress me out. Praise God for that. However, it's like, I'm almost, how can I phrase this? Like, I feel like so much of my life was wasted going to school. Like, right? It's like everything I'm living in right now is all accidental, almost stumbling, discovery, grace of God. And honestly, why we started this year, we started homeschooling Ruby, just cause it doesn't take much to give people the right information. Your daughter's going to be well, and she needs to learn values and, virtues and things like that, but doesn't need to know what pi is, which is what?
3.14. It's crazy. We got married on 3.1415.
Oh, okay.
We're both geeks, but no, it's crazy because you asked me why don't they teach this? And I've lived in Iran, I've lived in Japan, and I've lived in America. 3 continents, I believe. None of them, it's not an American issue. It's a global brainwashing issue because guess who benefits when you don't know the tax strategies? Guess who benefits when you don't know? Who will lose their job if you know how to manage your own money?
Who would lose their jobs if I didn't know how to manage?
If you know how to manage your own money.
Like the government?
No, the government was the taxes, but who will lose their job as an affluent person if you know how to manage your own money? The banks, the bank will benefit if you keep all of your money in the bank and think that that's the best place to keep it because they get to invest your money and not pay you anything in return. Oh, high yield savings account, you're the best. You know how much money they're making that they're not giving you with your money? They're only giving you 4% and you're happy about it. You know how much more money I've been making investing it on my own? The only reason I'm saving, I'm getting angry here. The only reason I keep it in savings account is because I'm like, okay, at least I know the capital, the principal is not going to go lower.
Sure.
But anything beside that, I know I'm going to be outperforming that. Yeah. And they are already outperforming it with your money and only give you 4%. That's best case scenario if it's a high yield savings account. Normal banks, freaking Chase, oh my gosh, Capital One, they're paying you 0.01% of your bank. They're making billions of dollars with your money. And of course, they don't want you to know that you should be taking it. They want you to think that your money is safe in the bank and that's the safest place to be.
Yeah.
Because they want to invest your money and get richer. How are they so rich? Is it because of your money? It's because of the money, the babies of your money that you are not accessing. All of your money babies are orphans because it's in the hands of the banks. And the other people who will lose their money, the money managers, the financial advisors. If you know how to manage your money, we have, unfortunately, and I love them, they're great people. They're not that bad people. The profession, though, I have unemployed many financial advisors because so many of my students have fired them.
Yeah. It's built on the ignorance of people.
Right. And then now you're seeing the sea of financial advisors quitting their jobs and like, oh, I'm no longer a financial advisor. I'm now an educator. So now they're becoming educators, which I think is brilliant. I'm loving it. I would take a financial course over a financial advisor every single day. So for all those financial advisors who are quitting and becoming financial educators, I love you. Let's do it. Let's go educate the people.
Yeah. Great. Thank you so much. Hey, where can people find you?
Where can people find me? All right. I promised you a risk management toolkit.
Yeah.
And you can find it in something that we didn't talk about, triplecompounding.com. So I have everything that we talked about here and more with visuals, especially on the charts and other financial calculations that you have to do. So there's a training you're going to go. It's my diamond training, triple compounding training. We didn't talk about triple compounding, but
sounds cool.
It's even better. So we just talked about one type of compounding today. But so in this training, you go to triplecompounding.com and you're going to get my risk management toolkit. You're going to get my triple compounding workbook and a 2-hour training. And other places, okay, so here's a very, very, very big warning on the screen. Please put it. I get 1,000 impersonators per day on social media, and I'm not exaggerating.
What a flex.
It's actually sad because they're now taking my videos and running ads using my videos and then sending people to scam WhatsApp groups and all these things. So my only social media channels, all of them have a verified blue check mark. Please check it. These are the moment you follow me, you're going to probably get a DM from an impersonator saying, hey, this is my backup account. It's not. I do not have backup accounts. On Instagram, I'm at Invest Diva. On TikTok, I'm at Kiana Danial. So it's either at Invest Diva or at Kiana Danial. No dots, no underlines, nothing else, verified. So that's where you find me on social media.
Thank you. Appreciate you for being on. And I will thank you when I hit my financial freedom numbers. Let's
go. Come get your award. Yes. Let's go.